Welcome into the Crypto Bunker podcast. Today, I want to talk to you guys about what's going on in Ethereum. We're going to look at some charts. I had targeted potentially going up to this weekly moving average, as just like it did down in 2019. But at this point, it doesn't look like we hit that, and it looks like the correction has now begun. I do think this was a bear market rally, similar to what happened in 2019, where we went up and then we actually came down and retested those lows. I think is very possible. I wouldn't personally look for the 800s, but I would look at that level around 1100, 1200, 12 in the basically 1000 to 1300 range. But overall, I just wouldn't be trading this market. I wouldn't have money in the market that I wouldn't be willing to lose or willing to have to sell in a recessionary environment where, you could lose your job. You could, crazy things can happen. It can go very much lower than we think. It could even come down all the way to down here, like I had originally predicted. Still possible. I really don't think, I think this was, just a classic bear market rally, just like in equities, which we'll go over in a minute. But it's a good time to accumulate. And if we look at it on a longer time frame, this is something that really we could battle with in this range for many years. I think this is a situation where we could potentially have a long-term bear market and we actually skip a cycle, and we come back up in 2028, 2029, 2030 timeframe. So that's kind of, it's not necessarily my base case, but I am accumulating as if, I'm a long-term holder. I'm a long-term bull. If we look at what happened again, I will show the Nasdaq. I do think that we're looking at a wedge here. This is an ascending wedge, and this is really the reason to be bearish on crypto in the short term. And I do think that the reason that crypto is crashing is actually it's front running the Nasdaq, just like it did at the bottom. Okay. Just like it did before this rally, crypto was really rallying ahead of this, and it was kind of ahead of it the whole time, which is impressive. But essentially what ETH definitely is a leverage Nasdaq. Bitcoin was not supposed to be that, so it's kind of hard, but it's too early in the adoption cycle for it to act like gold is going to act moving forward, in a slowing growth and deflationary environment. So basically, this is what I think we're looking at here on the Nasdaq. I think actually it could come all the way down to 218, personally, but I kind of just wanted to show this chart because we can see what happened between 2000 and 2014 or whatever, until this thing actually broke the all-time highs here. That's similar to what I see happening in crypto. Crypto moves at probably double the pace. So what I would say is this basically took 15 years. I could see crypto, maybe it takes 7 years. So we're looking at, again, it's like 2028 where we break the highs. But you can see that this is a nice accumulation range for the Nasdaq. And in fact, I'll just use this chart. It's a little bit longer in duration, so we can really look at it. But yeah, I mean, the accumulation was nice in this range. And that's kind of what I see happening with crypto. And honestly, the longer that we can do this, potentially, the more people we can shake out and the more bears come out and are just totally done with crypto. And that's kind of what I want. I'm thinking very long term here. I'm thinking And just look what happened. I mean, it was accumulation and then just a complete blast off for, years. And then we just had a double bull. So if we had a double bear market, maybe we actually end up with a double bull. And that's kind of what happened here. This was like a double bear market. It was a rolling bear market, you could say, for maybe 10 years. But people might be saying, "Oh, that's so boring. Like, what do we do in the meantime? How can I make money? Where do I put my money?" And again, none of this is financial advice. I'm not your financial advisor. Please consult one. I'm not one. I'd like to be one day, but I'm not at the current moment. So just keep that in mind. And none of this is legal advice or any of that stuff. Um, so yeah, gold is really where you want to be here. And I believe we have entered a bull market, and this is a new bull market starting right here. Okay. The reason I say that is because now the 20-week you can see is pointing up. So I'll just take this trend line off. But what we basically want to do in gold is we want to buy any dip that comes our way. So all you have to do really is watch the 20-week moving average, or SMA. And obviously we have some reversal patterns here. So there's potential for it to come back down to this 1900 level. And that's where you would be buying. It's the same with GDX. If you want a little bit of leverage, excuse all the lines. In fact, I'm just gonna get rid of these lines here. So yeah, what we have is the 20-week. And even it's above all of them, but so in terms of GDX, just like with gold, you're basically going to be looking to buy at the 20-week. I did say, the 200-week is obviously there as well. And you'll know that when we're in full bull mode is if we get the order. Okay, just like here, we got the order right. Okay, and see how you can just buy the 20-week. Now, obviously, 2020 happened, but again, buy at the 20-week. So this is like a mini bull run for GDX. But now, it's hard to like. I guess actually, let's look back at a blue chip, Newmont. Okay, and Newmont's been struggling in terms of just, and it's annoying because it's in all of the ETFs for gold. But yeah, I mean it's kind of just a stock that for some reason this doesn't trade great all the time. It's funny that this was actually the all-time high. It was the only stock to make an all-time high on that time frame. So obviously when '08 happened, okay, so let's actually look back and we'll say, okay, or we can even look to 2000. Okay, so let's look at 2000. Okay, and then let's compare it to GDX. Okay, of today, and let's get on the weekly time frame. Okay, we got a weekly time frame here. Okay, that's what we're looking at. So essentially, if we look at early 2000, we can see actually that this is a very volatile stock. So it didn't follow. And actually, let me be clear, with the 20-week buying thing, it actually only works for gold. I don't know for sure that it works with gold miners, but in general, we can get back to looking at gold in the 20-week there. So this is kind of what I'm looking at. I think, we bottom, we sort of double bottomed here, right? Just like we did here, sort of a double bottom. And this was even, let's say this was, let's say 2.5 years. This was August 98 to October 2000. It was over 2 years, almost 2.5 years. So you can look at this as a similar price action as right here. Okay, a little bit. Now we obviously came back. We kind of double bottomed here. That's pretty much as double bottom as you can get because 2020 was just stupid with the crash. So So what can we do here? I mean, we had the 20-week swinging down, the lowest of all of them, right? This is actually the same exact chart, guys, I think, pretty much. We actually had the 200 on top here, but in this case, we have the 150 on top, the 200's acting as support because it was like sort of a longer term accumulation as well in this case. In this case, this was total capitulation. Um, so, but as you can see, gold outperformed everything. Um, and this was a wild sort of ride for the Newmont people, but I mean, with this, you can say it goes back all the way to the 150-week moving average is really where you wanted to buy for all of these. So GX is not far away from that, and I do think the 200 will probably act as support in this case. But as I said, you can see when they get an order, right? That's when you sell. When they get an order. Now they got an order again, right here. Okay, so you can just know sort of based on that. Even here, right? They were in order, they were wide. I mean, it's simple, it happens every time. They were in order wide. Um, yeah, so you could even say that maybe we're here as well in the 80s or something. I mean, you can't really compare this to anything, but because this is more of an inflationary run, I think this is going to be a deflationary run. Which is great because for miners, deflation is the best possible thing because all their input costs go down and also gold goes up in deflation. So people don't really know that necessarily. But anyway, this is about to sort of start to look like something that is going to be crossing bullish. And if I look at it, if we compare it to this, from when the bottom happened here to we have sort of just kind of a test. Like we pretty much already tested it once here. We went a little bit below it. And then we kind of just continue to chop. And it actually took, let's say, May 02. So really a year and a half it took pretty much to through the bottoming process before it even ran, really like 3 years. So again, that's not something, I mean, that's honestly something that could happen again. And you have to just be really patient with these runs. And yeah, if we're looking at basically a few other ones I like, we can look at as well. But this is really where people should be paying attention. And crypto is like a long-term accumulation mode, and gold and silver are definitely ready to rip. Here we had a breakout. Okay, now sometimes in commodity runs, when we have a breakout, we also have a double bottom, but I think you can actually consider this almost like a double bottom. This is like a bull flag. Okay. And if all you have to do for a bull flag is you take this bottom, go to the top, and then you clone it. Okay. And then you run it from there. So we're looking at something like up in this range of $90. You can also do a fib rotate, reach a trend base fib, which will actually usually will line up with it, but right now not sure if it is exactly, but it's pretty damn close to the 1618. So that's pretty much where we're at. I mean, actually, I think this one here that matched up is actually taking it from the 2020 bottom instead of, that's what that is. Pretty sure. Maybe not. Well, either way, I like wheat and precious metals. It's not like a pick or anything. I've always liked Agnico, Eagle. We're sort of broken out retesting here on that, which is nice to see. Obviously Barrick is not trading as good. Same with Newmont, and it's funny that these like bigger miners are not trading as well. Like Barrick and Newmont are like two of the biggest. So, but look what we had, perfect trend line. So I think Barrick is probably undervalued here. I mean, it's still sort of low compared to others. It does have copper exposure, which I think Newmont has as well. So potentially that's why they're not going up. And that's annoying because I own, these ETFs that hold Newmont and Barrick. And so, I don't really wish that could have, to happen. But anyway, yeah, so we've broken out on silver. Um, and I've gone over this before. In fact, I'm just gonna remove these drawings for you guys. I'm gonna remove the indicators. Just gonna look at the averages. What I think that this whole structure is sort of this, okay? Um, I think that these are two things that are pretty much the same. We look at the 20 week, and this is when I said like this is the bottom because that's exactly when we bottomed here was when the 20 week went below the 200 week. And that's when in this scenario, just like here, that to buy. Okay. That's like usually a buy signal for silver because it just means that it's oversold, especially with a bullish formation like this. I mean, this is just a really, really cool looking chart, honestly. And just a big silver guy. So, you guys understand like silver's my main thing, really, along with ETH. So, I mean, just look at this thing. It's a huge cup and handle. And some people will draw it, for a cup and handle, which you can see here if you just do the full cup and even like a little double handle. And this is obviously long-term vision, but that might not even be that far off. I mean, if we take it, I don't know if you take it from the top. Like, I feel like I forget what that is, but yeah, I mean, people are thinking, $100 silver. My target's like 83, I think, or something like that. But, yeah, so remove these again. But if we look at just kind of the similarities here where we went up, right? That was the bottom. We called that. Okay. We went up. Same thing here, right? Down to the 200, pretty much. I mean, it went below, but and then up, and then it went back down to the 200. Now, that could easily happen here. So don't be surprised if that's what happens. You can see like we just formed this nice trend line there, right? So that's really what we're looking at. That would be around $22. And that is the trend line that you should have been buying for maybe 2 years or a year and a half. Okay. So we chopped for a year and a half. Okay. So that is very possible that we just chop in silver. Then it all happens at once. Okay. When you look at like that, comparing that, right? We're looking at April 2024 is when we maybe will start to break out if it did the same thing. So don't doubt that this is possible. A lot of people are just looking for an immediate moon. I believe this is a new bull market and we do need to test some of these regions pretty well. But once again, you can see that, once we got even, right? Once we had the 20 on top with the 100, the 150, and the 200, which is just obviously yellow, orange, darker orange, and red in that order. Look how skinny we are there. And then look how wide we got up in that range, right? So right now we're not even in order. Okay. We're not in order. We're getting closer to being in order, but once again, we're not. And this is an order as well. And so, it's pretty wild if you look at these on a weekly time frame, how obvious it becomes. Okay. Let's take a look at some crypto stuff again. It's just completely getting just slaughtered here. This is a really bad looking candle, guys. On the weekly time frame, it sort of reminds me of this guy. So that's no good. You definitely don't want to see something like that. Yeah, so this was when we just went down forever, like months at a time. We just never printed a green candle again. I don't think that's possible here, but I don't know. I mean, it could be. There's a potential, I guess, but yeah, I mean, obviously it's not going to negative. So yeah, no, it's not gonna. I mean, it's a strange structure. Let's actually look at like what we would look at, right? If this is a wedge here, and let's just try to be bullish. So, like, say that's a wedge there. Okay, we broke the wedge. Okay. So we've broken out on Ethereum. Okay. We have broken out. But what people don't know with commodities is that when you break out, you actually are supposed to retest the bottom. Um, let's look at this on a log frame because I feel like that is going to help put this in perspective a little bit better with this trend line. So, oh, did we even? I mean, well, you could say, okay, let's just say this, right? Let's say that's the breakout, okay? And that's what I'm going to go with, okay? So that's the breakout. Um, Now what should happen is a double bottom. Now, is that the bottom? No. Does that wick the bottom? Absolutely not. Okay, that's the bottom. It's around 1100. Okay. Um that's a pretty strong level considering it was around the all-time high. And usually, like I said, when you break out from a channel, and this isn't necessarily a channel though, guys. So just be aware of that. But usually if you have a channel, which, okay, like, can you say that's a channel? Maybe that is a channel because this was sort of just like not a real thing. So yeah, let's go with that. Let's say this is a channel. Let's say that this was actually I mean, it's almost like this was actually the top. And I've said this before, but when you look back at the past cycle, it's almost like this rally here was actually this rally here. So it's kind of weird. Um, but every cycle is not exactly the same. But like the moon was this, and then like we sort of chopped our way up to that. And then obviously down only. I mean, when you look at it too, this was kind of a head and shoulders, right? So you have a head and a shoulders. Um, and then you have the head and shoulders target, which definitely met. So yeah, I mean, and the other thing, I mean, obviously we do have strong support down here at this region. I don't think it will go below 1,000 again. But if the Qs go lower than what their bottom was, I mean, I don't know. But this didn't, even when the Qs made their low though, ETH did not make a newer low. So that's very strong. So I think honestly, like targets are obviously with these we have pretty strong consolidation of moving averages at this point. We don't really have any like past history to go off of because it's just a young asset. So we don't really have like a situation where the 200 was below the 150 week. Um, we can draw potentially what it would have looked like here if you think about that. Um, and like, okay, um, say we're like here, we're coming back down. We went through it. So we did go back through it. So, definitely possible. I'm looking at around $1,000 ETH. Let's look at Polkadot because I'm a pretty big dot guy. I would not say that dot broke out here. My trend line for dot is usually that guy. So yeah, it didn't. It did not break out, and um, yeah, something like that. So it just touches all the highs. So yeah, it did not break out, and that's fine. You know, but what we can dot is essentially just a long-term hold, and I can get into why that is or why you should be DCAing, not financial advice. Um but Dot has some advantages that over, other chains. I just think they're just a long-term type of blockchain. So that's my thoughts on Dot. Um, let's look at like rates. Okay, people, so we can just get a little bit of an update on that, and then TLT. So with rates, this is the 30-year. Obviously I had this line drawn and we retested, and that's kind of when I was like, okay, this is like the top for rates, and it was, and everyone was super bullish, rates going up. So I think that's kind of happening again here. We have a trend line that we're running back into. It's just a weak kind of looking chart. I mean, some people say, yeah, this is just a bull flag. I mean, I guess it's possible. I just don't see it. So I do see rates going down. I see TLT trying to hold the 20-week. It's holding this trend line pretty well if you look at it. Um, so yeah, I do think TLT is a buy. My target, probably around the 200-week moving average, I would say. But we're very wide still, as you guys can see. We're wide on the downside. So that's when you want to usually buy assets, either wide on the downside or or when they're close together is when you want to buy. When then obviously when they're wide on the upside, you want to sell. So it's pretty basic. I know I've said it a bunch of times. I love it. I love that way of looking at things. It's pretty simple. I hope that one of you guys out there has listened to me in the past and made decision potentially based on that and done well. What else can we look at? I mean, maybe Apple. This did not break out. I don't know why I don't have any drawings on it, but yeah, I mean, this is just about as bad as it can get. Like look at these candles, look at that candle, okay? This is the same thing, and then that. Like, oh my gosh. What unbelievable. So you could just say that this is a huge bull flag on a weekly frame if you wanted. I'm looking for the 200-week moving average. There's no way around it at this point. We're not in order. We're hanging up here, like we're not wide like we were here, but we're just hanging in no man's land. And it just doesn't feel, I mean, it just feels like we need to test that 200. Like, look how many times that we did that. Like, you can even see this is a bull flag. It just forms these like little mini bull flags, or you can call them bigger ones, really. But the stock, look at the 200, right? 200, 200. I mean, I think it could go below that even, honestly. Like, it's so, I mean, it's such a monster, right? Because it's like a utility stock. So you kind of, because like everyone owns an iPhone, but in a recession, like people may look to give that up. But here's once again an example of a company that just went absolutely sideways, man. Like unbelievable. From March 81 to May 04, or we'll say whatever. I mean, I can't tell in this picture, but I'm sure there was a rally here in 2000, but it didn't really ever, have a rally. It took just 25 years of like accumulation to finally get the reward. And that's kind of what I see with Polkadot in general. I know that sounds a little bit nuts, but I could just see this thing. It's such a long-term play. I could just really see it just going sideways and just chopping in this range here just forever, like like literally like 10 years. It just does that, and then it just goes whoop. Um, something like that. Because this is the thing with crypto. Oh, this is Uniswap. Why do I keep getting these confused? I'm sorry. It's like the same chart though. But it's like the same price is really where I get confused. Whoop. Um, I mean, the thing is like if Polkadot stays around, all it has to do is just survive the bear, you know? All it has to do is survive because unlike a stock, I mean, the blockchain kind of can't really go out of business, you know? It's just a decentralized protocol blockchain. And so I think, that's kind of where we're going to start to have this long-term vision of a potential sideways accumulation for crypto that people aren't really going to understand, especially the crypto people. Especially the crypto people. Okay. They're not going to understand. They're going to say it's over every way that they can. They're not going to hold. They're not, they love the volatility of it. They love trading it. They love, the bull market cycles every 4 years, man. Bitcoin halving, that is not going to happen this time. Okay. And that's my big call. And I do think we could skip an entire bull easily. So, we're looking at like 2030, 2029 potentially is like the next bull. And that's great, for people who really are investing in the technology and understand how early we are. Um, those are the people who are actually going to win out in the end. People who understand what these like networks can provide. They're going to provide enterprise grade, blockchains for companies, generalized blockchains, where a company can just come in on Polkadot and just build a chain. They can just build a chain, and it doesn't matter if it has a token. It doesn't matter. It doesn't need the dot token. It doesn't need any of that. And there's questions about the token value. I understand that. I'm gonna try to work with the community on that into the future, um but yeah, it's just it's a good project in my opinion. So all right, I'm done. I hopefully you guys got some